Well, at the next meeting, I think the MPC will be looking at a couple of factors. Most important, they'll be looking at the dynamics across the emerging markets, especially how a couple of countries has been increasing rates in a way to remain competitive from an inflation side and from an exchange rate side. Looking at countries like India, like Indonesia, like the Philippines, like Mexico, like a couple of countries. Also, the Monetary Policy Committee will, as a matter of importance, also look at the domestic economy, how we failed over the couple of quarters, especially the inflation came out a few days ago, and that showed an uptrending rate, as well as what economic growth had been, especially that of Q2, which went down quarter on quarter and as well as year on year. So these are the factors that the MPC will look at, as well as at the domestic end, especially at the money market end. Of course, you are aware that yield had been increasing in the last couple of weeks and even months. We also know that the market has been relatively challenged, especially from the equity side. I mean, these are all the factors that will fuse together to determine what the Monetary Policy Committee would come up with. But largely, we expect that the rates will largely be kept the same. More important, I must mention again, that this decision must be taken or will be taken in context of the 2019 elections, which obviously is taking shape, and everybody is considering that in all decisions, both at the investment side and even at the business side, as well as at the political side. You will agree.
So, Chigozie, let's bring in inflation into this. How do you think the recent 11.23 rise in inflation would impact the coming MPC decision?
Well, inflation is always a key determinant of MPC decision, and even to a large extent of the decisions that businesses take. I mean, most important, we need to look at expected inflation. You would agree that the so-called base effect that we talk so much about had eased out, and that is why inflation, part of the reason why inflation trended up. Also, you would also agree that if you look at the numbers critically, you realize that food inflation was a major, played a major role to the rates that we saw a few days ago. And looking at what the space of the food spaces in Nigeria, especially what is happening in the Middle Belt, the flood and the challenges. So this is also the planting season. One could expect that food inflation would also still trend up. So if that is the case, and if one expects inflation to trend up in the next couple of months, then MPC decision would largely be contractionary. So that means that the possibilities of a rate reduction is almost eliminated. So we are, within the rounds of having MPC at 14%, MPR rather at 14%, and largely keeping the rates at more or less what it is, going into the nearest future to also examine other variables and see what happened.
Chigozie, you're looking at extracts from the last MPC meeting. It is quoted to believe that the economy is on the road to recovery, citing oil price recovery, fiscal spending, stability in the FX. But then, the recent controversial HSBC report says that the Nigerian economy is merely papering over the cracks. What do you think?
Well, I would like to focus largely on what we know about the Nigerian economy and what data is saying.
So what does your data tell you?
Yes, it is right to say that the economy is coming out of recession. Exit from recession doesn't happen rapidly, right? So growth has been less than expected, yes, but the economy is coming out of recession. So, if you look at it largely, look at what oil price is and the contribution of that sector, and look at what is happening in the non-oil sector. Non-oil sector largely had driven this growth and this exit from recession. And I think we must acknowledge that. And I think what the system is doing, what the banks are doing, what the central bank and the government is doing largely, is to find a way to get this non-oil sector support the economy even much more, to see us shoot below, above the 2%, or even much more growth in the next quarters. I think that is the most important, and we believe that we are heading there.
At the last MPC meeting, domestic banks recorded some accolades from improved performances on non-performing loans, which continued to trend downward. The MPC did, however, give more tasks to the banks on strengthening risk management practices. How do you reckon the MPC will respond to the bank's performance since the previous MPC? Do you expect more accolades for the banks from the MPC?
Well, I think that we'll wait to see, right? But I think banks are becoming more, risk cautious. Days are gone when risk assets are created without appropriate checks. So if you said whether the CBN or the MPC will give banks more accolades, I think we might likely see that happen because the system is getting a lot more efficient. The banks, again, are getting a lot more cautious, so to speak, especially when an economy is coming out of recession, especially looking at what happened in the energy space as well. I mean, you would expect that a lot of caution would have to be applied, especially from a new risk asset creation in that space. So I mean, that is what I can say as regards that.
Give us a wrap of your expectations at the meeting, your single, maybe a couple of your expectations from the meeting on Monday.
Well, it could be difficult to say, right? We can only give highlights around what the expectations are, right? Like I said earlier, the MPC decision that would see is one that would likely sustain growth, especially at the non-oil sector. So, and that means that the MPR would have to be set at a rate that would support that. So, like I said earlier, reduction would likely be ruled out because of the competitiveness, especially when emerging markets are going up, especially when inflation has started trending up, especially when liquidity, we expect as a result of the coming elections, could be high. So put all that into perspective, one could see clearly that the MPR probably will be left at 14%.